we are live from Breakpoint 2025 with Matt Hougan, CIO of Bitwise. We're going to talk about everything related to Bitwise, BSOL specifically, and I think Solana's institutional adoption journey as well has been quite interesting in 2025. I have a few spicier questions for you about what's going to happen in the end of year, what's going to happen in Q1. But let's start very high level. What's the mood here in the capital of capital in Abu Dhabi today? You've got degens, you've got Solana DeFi OGs, you've got TradFi institutions, you've got trillion-dollar asset managers, yourselves, the ETF issues, everyone's here in the same arena. How are you feeling?
It's absolutely refreshing to be here. The energy is unbelievable. If you've been on crypto Twitter and feeling sort of down and downtrodden, that's not true here. I think the people here can see where this thing is going. They can see it going to trillions of dollars. They can feel it. They feel it in the people that they're meeting. So I've been rejuvenated being here. It's really been great.
Overall, a very bullish atmosphere, you'd say?
Very bullish, but not crazy, I would say. Yep. Very purposeful.
Okay.
Very serious people, but yeah, very bullish.
Good. So we've sort of moved past that extremely frothy period in the market, it seems.
100%. Yeah, it's actually, from my perspective, the perfect vibe. Because when you get to that overly frothy feeling, you know that you're set up for a pullback. And we've certainly been at conferences. If you've been in crypto, I've been in crypto for 8 years full time. We've seen conferences where it felt like that. This does not feel like that. It feels like a building atmosphere, a positive long-term building atmosphere.
I haven't seen any Lambos outside. Maybe that's a good indicator.
Yeah, great indicator.
That's right.
That we're serious. Matt, first I want to congratulate you on getting the BSOL ETF listed in the middle of government shutdown. It's a real 4D. It was 4D cheers. We had all kind of written off that nothing was going to happen until the lights came back on the White House. What did that look like from your perspective? Were you guys confident that you were going to be able to get that through using the delayment amendment?
Well, we were hopeful, I guess is the right word. We shouldn't let the government being inefficient and unable to do things slow us down in crypto or in asset management. It was one of those moments where we thought legally we could do it. We felt good about it because we had had lots of discussions before the government shut down with the SEC. So we felt like we were at the end. But until it started trading, I had this little thing in the back of my mind that said, who knows how this is going to turn out. Maybe at the last minute, the rug will be pulled out from under us, but it started trading. The response has been phenomenal. You've seen the inflows consistent almost every day, which is very rare in ETF land. So yeah, it was, we thought we could do it. We were confident we were right, but until it actually happens, there's always this worry that it won't. And it was really wonderful to see BSOL launch.
And there was even that kind of validation from Chet Atkins who said it's really pleasing to see companies going up and figuring this out and getting listed in this manner.
Yeah, I think that speaks to the new ethos at the SEC, which is pro-investor and pro-innovation, as opposed to let's block everything and not let anything go through. And it's been really great from my perspective to give people an opportunity who are comfortable owning ETFs to access Solana at the prices we've seen. It's been sort of I look out 5-10 years, this is a phenomenal gift that we got it out this window.
I want to attach some numbers to that success. Yesterday, we got reports that you were leading inflows again with $3.7 billion. We're looking at total Solana ETF AUM just under $1 billion now.
Yeah.
And I think you guys became the single most successful ETF launched of the year with $500 million, I think in about 3 weeks or so.
Yeah.
How did that feel?
It felt great. It's great to see the audience respond to Solana. We weren't surprised because although we couldn't talk to people about ETFs specifically, Bitwise does 15,000 meetings a year with institutional investors. So for the past year, we've been talking about stablecoins and tokenization. They've been asking us how to access it. We have been telling them Solana is probably the most leveraged play to the growth of those themes. So we knew that there was demand. But it's of course wonderful to see a product launch and see the people come in, and those are really big numbers in ETF land. I should say, I come from an ETF background. I was the CEO of ETF.com. Most ETFs struggle to get to $50 million in their first year. To see something get over $500 million in flows in just a few weeks is an outlier. It speaks to how much Solana resonates with investors.
And I think to your point earlier about the mood here being overall bullish compared to crypto Twitter, where we saw extreme fear on the fear and the greed index, institutions seem to be very optimistic. So my question to you is, for us, at least in crypto Twitter, when we're not at these conferences, what often drives sentiment is price action. What has been driving that optimism from the institutions? Is it the fundamentals, or is it simply the fact that you can get levered exposure, as you said, to the growth of Solana? What is driving that optimism?
It's just a really easy bet for institutions. When you're betting on Solana as an institution, you're making two bets. Bet number one is that stablecoins and tokenization will grow. You have the chair of, or you have the Treasury Secretary saying stablecoins will 12x in the next 4 years. We just had Paul Atkins come in and say tokenized, all US stocks will be tokenized in the next couple of years.
Extremely bullish.
So, I mean, more bullish even than I think many people at this place realize. There's $680 million of tokenized stocks today. The US equity market is $68 trillion. That's 100,000x. That's extraordinarily bullish. So institutions look at that and say it's fait accompli. Stablecoins and tokenization are going to grow. I want to invest in that. And then on the Solana side, you get the second bet, which is that this better, faster, cheaper ecosystem is going to get a bigger share. If you can get two bets at once, that's why it's resonated so much with institutions.
So has that become then the ultimate race, that as tokenization comes on chain, is up to each chain to really scramble to get as much of that inflow as they can?
Yeah, I think that's right. Tokenization and stablecoins, and I think institutions will judge on the relative success in those areas. They are excited about Solana, which is the leader on tokenized equities, because that's a space they know and feel and can see coming clear as day. But yeah, that's what institutions are going to be judging Solana and other chains on in the next year.
I want to just dial on that tokenized equities aspect.
Yes.
Part of the beauty of crypto is that it's 24/7 on-chain finance that anyone can access from anywhere. Has there been some pushback from traditional financial players to say, we still want our weekend, we still want market hours?
Let me sleep.
It is true, when you come into crypto, you do wish that the market would close, but there's an inevitability to this, right? I mean, I think that people recognize there's no way we're not moving 24/7, 365 global. Will systems have to adapt? Will they need people in different geographies? Will liquidity have to change? Absolutely. But people know where this is going. We've seen this movie before in other parts of the digital arena. It's absurd that the New York Stock Exchange shuts down at 4 p.m. It's absurd. And so I think people recognize that. But yeah, they're sad to lose their weekends for sure.
I want to ask you about that $68 trillion figure, because I know there was a bit of an exchange on stage with Max Resnick yesterday.
Yeah.
So that's super curious. A bunch of people messaged in about that as well. But before we get there, a little bit of a reality check. Now, we've seen the SOL price correct significantly. I think it's down about 40%. Let's say it drops another 40%.
Yeah.
How would that potentially negatively impact BSOL?
I think you would still see inflows.
Okay.
I think you would still see inflows. It is of course true in any asset that you get more inflows if it's doing well from a price perspective.
Yeah.
But you have to remember that institutions are starting at zero. It's not like they have established Solana positions. They're starting at zero. So there's this one-time injection of flows that I think will take a year or two to play out. So if it falls another 20, 30, 40%, that will slow down flows, but I don't think we'll see outflows. You saw that in Bitcoin, right? Bitcoin ETFs launched January 2024. Yes, there's been months where there have been outflows. That of course can happen. But broadly speaking, they've pulled in $50, $60 billion. That's because people are getting off zero. Crypto native investors aren't at zero, so they
Quite the opposite.
Quite the opposite. They're well north of 100.
Yeah.
So they may come in, they may come out, but this is a 5 to 10 year net inflow bid. Not every day, not every month, but every year. I think we'll have positive inflows for the next 5 to 10 years on BSOL.
Can we say the same thing about DATs, digital asset treasuries? To a certain extent, people argued, and I think made a very compelling case, that DATs were sort of front-running ETF approvals.
Yeah.
We saw valuations go up, stock prices go up, and then it all sort of started unwinding. Now, the reason why I'm asking this is because we've been asking many of our guests, to what extent do you believe that Solana DATs specifically pose systemic risk to the ecosystem? Curious what you think. Curious if you think, following another 40% price dip, these SOL DATs would cause significant systemic risk to the ecosystem.
I don't think significant systemic risk. If you look at the concentration of SOL held by those DATs, the biggest share tend to be in DATs that don't have significant debt and that are what I would call missionaries in the space. I like to think of DATs as missionaries and mercenaries. You have the people who really believe in an ecosystem. You have Kyle Samani as chair. He's not going to be selling SOL. Then you have the people who followed on, sort of the Me Too's, who saw an easy buck. They might get washed out of the system, but they own a very small fraction. The ETFs are a much bigger deal than those DATs. So I don't worry about DATs. Will they buy less SOL in the future than they bought this year? Probably. But you didn't have an ETF filling that other bucket. I don't think they're a systemic risk at all. You'll see a few small ones blow up because they're poorly run companies. That's fine. That's okay. The big ones are going to be just fine, is my take.
Consolidation, shakeout, mergers and acquisitions, totally natural progression of DATs.
That's exactly right. The thing about running a company, any company, and a DAT is a company, is that you have to do something hard to be rewarded.
Yes.
And so the DATs that just wanted to do something easy, like what my ETF does, buy SOL and stake it, that's easy. They shouldn't be rewarded. The ETF does a better job than that. The more creative DATs who are contributing to the ecosystem or finding other ways to grow, they'll be rewarded. But yeah, look, in broader equities, we don't worry if one company goes bankrupt and another goes to $1 trillion. That's fine. That's capitalism. That's how it works.
Yep.
Same thing is true here. They're not all created equal. There'll be winners and losers, and that's totally fine.
Nothing to worry about.
No.
I think one of the prevailing conversations we've had is that, like you say, the DATs that have just kind of caught on and rode the wave, that don't have any extra value offering to the ecosystem, probably won't make the cut. Whereas ones like Forward Industries, like Soulmate, who are doing infrastructure and RPC platform off the back, these ones that have a business that runs alongside the treasury are more likely to go the distance.
Absolutely, yeah. Again, companies have to do things hard, right? You can't do something easy and succeed. Those companies will get washed out. I think they'll just be a mix. We need to stop talking about DATs as a group and start talking about individual DATs, and I think that'll be the story in 2026.
I want to get back to your talk on stage yesterday. You mentioned 68 trillion, 100,000x, right? You argued that maybe we're not quite there yet. Max Resnick has a slightly different take. He thinks that it could happen. I don't know if overnight was his argument, but he thinks that we're a lot more ready than you think. So talk me through that discussion. What were the two sides of the argument? How heated did it get?
Yeah.
And what was going on there? 68 trillion is a massive number and everyone's been asking about it.
Yeah, so the debate was, is Solana ready to handle all the flow that Wall Street has? And from one perspective, the person who had the con setting there was arguing, look, Wall Street sends millions of messages a minute, right? Is it really ready to handle that kind of consistent flow? And it needs to be, because it can't break once the world's equity markets are built on it. It can't break. Max's perspective was twofold. One, the technology is more ready than you think. That was part of it. He hinted at an announcement later today to suggest that that's going to be increasingly true. And then also, I think he made a really great point, which the existing Wall Street system is dramatically inefficient. So a lot of those messages are unnecessary in a new, more modern system. And I think that's probably something that the community doesn't talk enough about. My view is that the technology has had a chance to get ahead of the existing system. We're currently ahead. It still needs to iterate and get better. If $68 trillion came on chain today, I don't know what would happen.
Right? We were speculating about that earlier as well. It would probably not be great for our banks.
It would not be great. To say why that's not bearish, think about if that was true, I don't know, 4 or 5 years ago. Right, on ETH, we saw transactions spike to $100 each. Like, that would be one and done. I actually think conveniently, because regulation suppressed growth for so long, the technology had a chance to get ahead. I think of it as like, it's like one lap ahead in the race. And there's probably like 3 or 4 laps left until we're there, 3 or 4 years. And it just has to stay ahead. It's not a guarantee that it will, but if the developers here do their job, then I think it has a chance.
I want to play devil's advocate on that for a second. So we talk a lot about bringing this $68 trillion asset market on-chain. Solana's obviously in a great position to do that. We want to see Solana take the bulk of that. What stops the established TradFi giants with trillions at stake already, a huge amount of resources, a large war chest, from just spinning up their own competing privatized validator, network, and attracting that tokenization?
Yeah, they're going to try, and there is some chance that they succeed. But the history of technology suggests that opens wins. I remember the early dot-com bubble. So just to give you a story from internet past, in the early dot-com bubble, people were like, the internet won't work. This open, crazy space is too insane. There's no way it'll succeed. Everyone loved intranets. Intranets were the thing. This company has a safe corner of the internet. It's so useful. They were on the front page of magazines. They were on CNBC talking about intranets, but open ultimately wins. One thing that we should clarify, we talked about the US equity market, $68 trillion. There's another $60 trillion globally. And part of the reason why I don't worry about that ring-fenced nature is that financial markets broadly are not just going 24/7, 365, they're also going from regional to global. And in a global scenario, open, from my perspective, is probably the only way it works. So I think Solana will win. I think they'll try to create their ring fence, but the world wants this to be a global capital market. They want it to be 24/7, 365, and open is the solution there, not closed.
When we talk about capital markets being open, what comes to mind is the whole slogan of internet capital markets is literally on Finn's
there you
t-shirt
go.
as well. I'm curious from when you talk to your TradFi counterparts, some of these large sophisticated investors, are they warm to the concept of internet capital markets? Is it something that they care about? Would they rather listen to you explaining the value of stablecoins and tokenizations, for example, or RWAs? Do they care about internet capital markets at all?
I think they're getting there to care about it. They need to see real world use cases that match their understanding. So stablecoins is an easy example. Tokenization is an easy example. I don't think they imagine all that internet capital markets could do, but that's true of any technology innovation, right? Like, I keep making these old analogies, I feel bad, but go back to the early days of mobile. The idea of like summoning a stranger to pick you up in your car was totally crazy.
True.
Like,
or staying in somebody's house.
staying in some random
Airbnb,
dude's house?
Yeah.
Like, are you kidding me?
Renting
He's
a
gonna
room,
kill me,
yeah.
right? Absolutely absurd. And one thing I try to convince people when I talk about this broader vision is that you can't possibly understand and imagine all these things. If you did, you'd be Max Chesney. If you did, you'd be the head of Uber. And we will have those things too. So I think there is a broader story here, and people understand it, but it's easier to ground them in stablecoins and tokenization because it's skeuomorphic. It's what they know. They can imagine it being better, faster, cheaper, global, and we'll just we'll walk them along.
That makes sense. I want to ask you about inflation. I know this is something that Finn thinks a lot about. I have a feeling Raj and Toli are going to be on stage shortly. They're going to apparently announce where the next breakpoint's been. Do you have any insider information on this?
I don't know. I don't have the insight.
Can you
right
leak
there.
anything?
No.
We've been trying to get a scoop on that all morning, actually. So excuse me.
I
for
want to be
turning around.
invited back. I can't leak
Absolutely,
anything.
absolutely. You want to?
Yeah, so jumping in on inflation, one of the most palatable examples of why staking ETFs was so critical for the success of ETFs in general is that it provides reliable, stable, and predictable yield for ETF investors. Solana is now discussing bringing that inflation down. Does that make it a harder sell towards your institutional client base?
I don't think so. The thing what people want with ETFs is they want an easy button if they're comfortable in that environment. So as long as an ETF like BSOL is staking 100% of its Solana, whatever the yield that's available to us, that's great. The core investment someone is making when they're trying to access SOL is not for the staking yield. It's for the 10x return that's possible if we see all this money move on chain and Solana dominates. The staking yield is nice. So if inflation comes down and that's positive for the price of SOL, they're happy. All they want from the ETF is to know it's safe, secure, it's low cost, it stakes 100% of its assets. It does so in a way that's aligned with the community, which we're really proud of doing at Bitwise, working with Helios. That's what they want. So I don't think it will harm inflows at all. I think, again, inflows are this one-way direction on Solana.
Speaking of inflows, quickly,
Yeah.
You've attracted around 74% of the entire AUM of the Solana ETF market. How have you managed to stay so far ahead? Do you think that's going to continue to be the case? Do you see things leveling out?
I think you can tell the word inflow just triggers both of us.
I love it.
So let's go.
Maybe one more inflows.
Yeah.
We have two advantages there, and I hope we'll be able to maintain a lead. One is that first matters in ETFs. You're the largest, you're the most liquid. People know you, they know your ticker. That builds on top of itself. The other is that, look, Bitwise is one of the largest crypto asset managers in the world. We do 15,000 meetings with investors every year. There aren't many people who can say that. So in terms of educating the community and bringing them into Solana, I do think BSOL will be the leader in the space. At least I hope so. We're really pleased to have this position. We feel very aligned with the Solana community, and we're gonna do everything we can to maintain that leadership.
And you have been embraced by the Solana community. It's
feels
the
great.
first thing everyone talks about. They wake up in the morning, they check their
Yeah.
And then we had 22 straight days, which is, I think, almost unheard of in crypto ETF history. Just consistent inflows.
Unheard of in ETF history,
Yeah,
right?
yeah.
30 years of ETFs, you rarely get that consistent inflows, and I think that will continue. We're gonna at least try to do our part. Yeah.
I want to end on a super bullish note, but before we get there, again, a slight reality check, I guess. you have 15,000 meetings per year with TradFi investors. These people are sophisticated. They have, much higher, lower risk tolerance than we do, and longer investment horizons, let's say. What are some of the major concerns that they voice to you? Not just when you talk about crypto, Bitcoin, Ethereum. I know you're interested in these realms as well, but Solana specifically. What are some of the concerns that they voice?
Yeah, the biggest concern is whether we'll get market structure legislation in the US.
Which is apparently coming.
Which we hope is coming. I'm optimistic is coming, but when people ask me, what are the risks in crypto, the technology is not really the risk, it's politicians messing it up.
Right.
So I think, I actually think it's important from an inflow perspective. I think inflows will be somewhat suppressed until that risk is removed from the market, because there is the perception that if we don't get that, the regulatory future of crypto in the US is more uncertain. And that probably affects Solana more than like Bitcoin, right? Because you're building real world use cases. So the regulatory posture matters. So when I think about what prevents them, it's that more than anything else.
Yeah.
And then the second thing is just time. They just don't have much time to learn about things. So, but I really think from a short-term perspective that do we see market structure pass before the US midterm elections will be the determinant on whether, from my perspective, we certainly go to new all-time highs next year, or whether there is some choppiness in the market.
Very, very interesting. I think we spoke with Anthony Scaramucci yesterday. He would likely echo your sentiments on that.
Yeah.
You speak about choppiness. If we go back a few months, we had the biggest liquidation in crypto history. Do you think there's still some contagion hiding in the closets of that event?
Well, I don't know is the answer, but I'm glad you bring it up, because I think it's one of the reasons I expect the market possibly to be choppy through the end of the year. There are these two forces that crypto investors are worried about from my perspective. It's people trying to front run the 4-year cycle, which you can do until the end of the year, and then it's too late. And it's worries about bodies emerging from the 10/10 liquidation event. If bodies are going to emerge, chances are they want to wrap up by year end. They don't want another set of legal documents. They don't want another set of tax filings. So there is like some risk of bodies emerging to the surface as we get towards year end. Once those pressures are removed, I think you're going to see the impact of inflows trying to sort of steadily push the price up. So choppiness through the end of the year, and then we're very optimistic for Q1.
We were very optimistic for Q4. I remember a few months ago, the argument was, and it seemed totally logical at the time, that the debasement trade would essentially force many asset managers to say to their clients, hey, look, we understand risk on assets. We think this is a sort of general trend, and that capital would continue to flow. In fact, inflows would accelerate into assets like Bitcoin and trickle down perhaps into Ethereum and Solana as well. That hasn't necessarily happened. We've seen sort of quite the opposite in terms of price action. Obviously 10/10 played a role in this. The government shutdown played a role in this. But still we have this divergence, as we've described, of crypto Twitter sentiment and institutional investor sentiment. To what extent are we confident that that's now going to be a Q1 rally versus we still need to see this regulatory clarity before we see a rally?
Yeah, I think the regulatory clarity is really the starting gun of when all the major risks are removed. So we talked about those two risks, front running the 4-year cycle, the 10/10 liquidation. I think those peel off at the end of the year.
Right.
But it is the market structure bill that I think will be the all clear signal. You'll start to see the market pricing in the probability of success as that goes up. We actually got some relatively good news today from insiders on progress that the group has made toward getting that over the line. So it's not like the market won't rally until that happens. Of course, markets are anticipatory, but I do think that before it's all guns blazing going higher, I think we need to see that market structure.
Very, very interesting. And Finn, yesterday you were asking some of our guests to what extent the midterms pose a risk to that as well, right?
Totally. I mean, for what, if it doesn't happen by like May or June, it's not going to happen. And I do think because the politics of the midterms is uncertain, if it doesn't happen for this Congress, it's unclear that it will happen in the new Congress. So I actually do think, I think it's really important that we get this done in the next 6 months and get it embedded into law, because the positive regulatory aspects are just sort of regulatory. They can shift with a new administration. They can shift with new politics. So I think it's really important. Yeah.
To what extent do you think the current administration, let's say Donald Trump more specifically, his family's involvement in crypto, digital assets, more broadly speaking, they're involved in many, many projects. To what extent is that involvement going to encourage him, do you think, to really get this over the line?
I think it obviously he's made a commitment to crypto. Crypto rewarded people who were pro crypto in the elections. I think that's positive. I also think, you know, his family faced debanking and sort of felt those challenges. So I think they're aligned with that philosophically. But look, it is bipartisan, right? People forget this. Like the Genius Act was the third most bipartisan bill in Congress this year.
Which is fascinating to think how far we've come in such a short period of time.
It's absolutely amazing, but that's because so many people in the US own crypto, right? More people have crypto than have dogs. It's a big deal in the US.
That's an interesting fact. I didn't know that.
It is.
It's a very real world
Yes.
that you can visualize.
I use that all the time with financial advisors. They're like, none of my clients have crypto. I'm like, do any of your clients have dogs?
Yeah.
Of course they have dogs, and of course they also own crypto. So they're millions of Americans. So I do think it has a very good chance. And Democrats want it, and Wall Street wants it, and crypto wants it. So I'm optimistic, but we do need to see it get done.
So the 4-year cycle at this point, is it a myth?
Yeah, completely dead. It was true. It's no longer true. The forces that caused it are no longer relevant. And now we have these new forces of institutional adoption. I think 2026 is an up year, so we'll drive a dagger through the heart of the 4-year cycle, and we'll never have to talk about it again.
Raoul Pal has an interesting theory on this as well, is that in this particular instance, it's been elongated due to not just liquidity, but also the business cycle. Do you agree with that, or do you think there's maybe more or less?
Yeah, I mean, well, I do think liquidity is an aspect. When I look at the 4-year cycle, just to dig into it for a minute, I think about what drove it past. It was the Bitcoin halving.
Yes.
It was interest rates, and it was sort of blow-ups in crypto, right? Those were the three things. The Bitcoin halving is definitionally half as important every 4 years. So at this point, it's just not that much Bitcoin. It doesn't matter that much. It's not as important as it was 4 years or 8 years ago. Interest rates are going sideways or down. They went way up in 22. They went way up in 2018. So that is not, and blow-up risk is substantially reduced because we have a more positive regulatory environment. We're not going to get an FTX. We're not going to get a Mt. Gox. Yeah. I wish this were but I think it has been substantially reduced. The space is more institutional. It's more established. So I think the blow-up risk is much lower. So those three forces just aren't as relevant as they were in 22 and 2018. And on the other side, you have 21 straight days of inflows into BSOL, right? You have you have ETFs that buy more than 100% of the supply of Bitcoin, Ethereum, and Solana. So there is net negative supply in all of these markets, and that's going to accelerate next year. I just don't see how the 4-year cycle repeats. It just doesn't make any sense to me.
So moving forward, does that look like absolute maturity, wherein we have higher lows and lower highs, where you enter just a much more stable price action moving forward?
I think it's grindy. That's my expectation on price. That doesn't mean we won't have 20 or 30% pullbacks. I think there's still substantial upside. You don't get return without risk. But I think the days of 70% pullbacks are over. I think it's going to be grindy, and that may be frustrating to crypto Twitter for what it's worth. It may be just slow and patient and up and to the right, but there's still a huge amount of upside. We're still so early. I shared this slide the other day about the relative size of these markets, which I think is worth, we think of crypto as big, it's $3 trillion. We think of Solana as big, it's what, $70 billion. The global equity market is 110 trillion. The global bond market is 150 trillion. It is orders of magnitude bigger. So we still have a long, long way to grow. But yeah, it won't be as volatile as it has been. It's going to be more grindy and up and to the right.
It always gets put back into perspective, when if Nvidia does a 5% move, and that's the entire market cap of Bitcoin itself,
Yeah, that's exactly right. I mean, I mentioned this yesterday. ETFs added $4 trillion in assets last year. That is more than all of crypto, right? So the scale is just really, really big. And we're still super early in crypto, which I think sometimes we forget.
We absolutely forget that. It's so easy to lose track of size and scale. When you're in a place like this, you think, oh, we've made it. It can't get any bigger than this. You've got, $1.6 trillion asset managers. You've got $5 trillion asset managers. Surely this is the ceiling, but we're not anywhere near that, are we?
Nope, not anywhere near that.
No.
It goes much higher still.
I want to end on a very, very bullish note. It looks like the 2026 conference location is about to be announced on stage. I'm visibly excited about this. But for you, Matt, what is the single most exciting development that we can look forward to in 2026 in terms of where Solana might be going next?
Yeah, I think it's going to be twofold. We're going to see market structure regulation go through. And then I really think we're early in the phase of a million interesting applications. I think even crypto natives understate how much crypto was suppressed by the regulatory pressure. That was released a year ago. You can imagine really smart people now feel comfortable to build in this space. So I hate to say something that I don't know specifically what happened. I can't point to this, that, or the other, but I think we're going to see the entrepreneurial energy that was released when regulation was lifted from its oppressive state start to bubble up in exciting new projects. Another way of talking about it, just to close, 3 years ago, we talked about crypto. It was mostly about Bitcoin.
Yeah.
Today, we talk about crypto and it's Bitcoin and stablecoins and tokenization. I think what we're going to see in 2026 is there's like an infinite number of those interesting applications that have real world scale. And I'm just really excited about it.
I think we're also super excited. It feels bullish. I mean, price action, we were joking earlier, price is so 2024. It's all about the fundamentals. Finally, that's unfortunately all we have time for. Matt Hougan, thank you so much for making time to chat to us on Solana Floor. We will be in touch. Thank you very much.
Thanks for having me.
An absolute pleasure.
Yeah, absolutely.